Good morning from London. I'm Kriti Gupta alongside Valerie, Tytel. We're an hour away from the opening trade. Here's what you need to know. U.S. and Chinese trade negotiators say they've struck agreements on issues ranging from tariffs to soybeans and even rare earths ahead of a high-stakes meeting between Donald Trump and Xi Jinping. Meanwhile, the White House also citing progress on trade with the likes of Brazil, Malaysia, Vietnam, with setbacks emerging in other spots of the world, Canada and Japan on the docket, where President Trump is due to land soon. And on the markets front, softer U.S. inflation and consumer sentiment data bolsters the case for a rate cut from the Federal Reserve this week amid a slew of central bank decisions from around the world, Val.
And we're starting this hour adding to record highs across global equities. The MSCI Asia Pacific notching a new record overnight, up 1.6%. We're also adding to record highs from Friday when it comes to S&P futures, up 0.8%, and NASDAQ futures up 1.1%. A lot of excitement around this framework deal that Bessent worked out with the Chinese over the weekend. The countdown to the opening trade starts right now.
Welcome to the opening trade. It is Monday morning, and I think progress is the name of the game, at least in some parts of the world when we talk about trade. As Val said it, we hit a record high on Friday. We're hitting at least pushing higher in terms of the record stock moves that we are seeing today. It all comes back to April 2nd, to Liberation Day. We've come full circle, Val. Everything's fine when it comes to trade.
Yeah, this preliminary consensus reached across a wide variety of topics. Now, obviously, Xi and President Trump have to sign off on the permanent deal on Thursday when they meet in South Korea. But over the weekend, we had Bessent talking about this delay to rare export restrictions. Could be up to a year from China's side. They talked about soybean purchases, cutting those port levies, even progress on those fentanyl tariffs, which is the extra 20% tariffs that were put on China in terms to try to get those precursors to fentanyl stop being exported from China, and positive words about a longer-term extension of these reciprocal tariffs between the two countries.
I think it's fascinating here. The effective rate right now on China is about 40% when you look at the tariff rate, even with the trade truce that's in place. I think it expires on November 10th, I want to say. So we're about 14 days away, if I can do my math right. I think what's crucial here as well is that the readouts of both sides were quite
matched
alike, which we haven't seen in previous iterations. The one thing that you did see the Chinese authorities really push on is say we need the U.S. to hold up what they're telling us on this side. And I think that piece is really crucial, and perhaps the most interesting read out of what is, to your point, still a framework deal. We don't actually know how many of these things will end up in the final iteration.
Yeah, and I think it was important that China did come out and say similar things to the U.S. side, because previously we've had the U.S. come out and claim success while the Chinese side remains quiet. But China did seem quite positive that progress had been made, and I think that's really what's helping the equity market notch those record highs over or at least to start the trade and the sentiment over the weekend. We have to remind ourselves, though, that we've been here before. On June 11th or early June, we did have the U.S. president saying that we are coming close to a complete deal with China. So there are at least some skeptics out there on whether this deal will be lasting. Because remember, we thought we had already decided the rare earth agreement between the two countries a few months ago, and now that has been back on the table. So again, whether this is a lasting agreement that can lead to a more positive and constructive relationship between the world's two large economies is still a big question.
Let's talk about the things that are not in the trade deal. Taiwan not included. Trade Representative Greer had talked about this over the weekend, saying that is not something that's been discussed or even on the table as part of these negotiations. Intellectual property when it comes to technology, still a major concern there. The semiconductors and the chip equipments as well when it comes to that. We know there have been major export controls with the likes of NVIDIA chips, with AMD chips to China. That wasn't discussed at all either. So there are pieces where progress is being made, to your point, but there are pieces where there are still tensions between the two sides, and that's really crucial. I think that brings us nicely, perhaps, to some of the other trade deals that are being negotiated around the world. You brought up soybeans and farm purchases, which is a key part of Donald Trump's first administration's kind of trade agenda as well. In the meantime, China has been diversifying some of their supplies. So on soybeans, which was the one that caught my attention, it looks like Donald Trump also now trying to make nice with Brazil, which also had one of the highest tariff rates. He's inking deals with Vietnam, inking deals with Malaysia as well. So some good news. baked in.
Look, and I thought what would happen with Malaysia might be key, again, to the chip export story. I reminded myself this morning that Malaysia is the 6th largest exporter of semiconductors. It counts as the U.S.'s 3rd largest trade relationship when it comes to semiconductors. So, again, perhaps there is some progress when it comes to the wider chip story. They do want chips to be spared from any future levies, and that seems the framework deal that they've reached with Malaysia. There was also a framework deal with Vietnam, as you mentioned. And then Brazil, Lula da Silva also met with President Trump and Scott Bessent over the weekend, said it was a surprisingly good meeting, and even offered to help the U.S. with their drug war when it comes to Venezuela.
Yeah, it's fascinating as well. So some progress there. I think the Malaysia piece is so interesting. I didn't know that. Fun fact for your Monday morning. Let's talk about where the setbacks actually are. Canada is not on good terms with Donald Trump right now, to the point that he was on Air Force One earlier in, I was going to say like an hour ago, talking about the fact that he is not looking to meet Mark Carney at any point. Despite we did see on Friday and over the weekend that Doug Ford over in Toronto kind of pulled the ad on Ronald Reagan. This is something that has now instigated about another 10% tariffs on two big pieces of North America that we thought the tension was thawing. It looks like it's gone in the opposite direction. Another one that caught my eye now that we're talking about Asia and his next leg is what's going on with Japan. You have a new government in Japan. Will they or will they not honor some of the agreements that have been made in the previous administration?
And Trump is landing in Japan in the next hour. He will be meeting with the emperor and the newly minted Prime Minister Takaichi. We know that Trump is a lover of Abenomics, so perhaps he'll have that same kind of friendliness towards the new Prime Minister. But landing in the next hour, those meetings conducted today while Trump is in Japan, we'll be monitoring those for you as well.
I think it's fascinating as well that you mentioned Takaichi specifically, because one of the key pieces of that framework deal is a $550 billion investment fund view. That is something that has been the framework for potential conversations with South Korea as well. And we actually, and we'll play the sound a little bit later, we heard from the South Korean president speaking to Bloomberg that that's where those investment promises seem to be a key sticking point. So we'll see if that changes for Japan as well. Enough with the trade. Let's talk about the real stuff. Let's talk about inflation. Is 3% the new normal? Is that just what we should get used to now when it comes to this softer inflation print, which still feels, I don't know, kind of high to me? What do you think?
Well, look, the year-on-year numbers did tick higher in terms of that core CPI number staying above 3%. But really, you get down into the details, there were some positives, at least for the Federal Reserve's fight against inflation in that CPI print. The big one was really, again, the lack of tariff pass-through didn't seem to be as big as someone feared. And then secondly, housing inflation, one of the biggest moves downward in housing inflation, the lowest print for OER, that's owner's equivalent rent, since 2021. So progress on housing services inflation, and that's really key because it's essentially not a component that's mean reverting. It trends, and that could be something that could really outweigh this goods inflation for months to come.
I mean, just the fact that you are starting to see, I mean, I'm looking at a 403 right now on the 10-year yield. I didn't expect to see that off a softer inflation report.
Yeah, I think the market reaction was pretty underwhelming and disappointing, especially given that move in housing inflation. We reversed a lot of it even by the end of the session on Friday. And again, the weakness in the Treasury market today because of this risk on sentiment, reversing more of that Treasury bid. But the other thing I thought was interesting from Friday's discussion around CPI is even the White House is now talking about the fact we are not going to get a CPI report in November. That October release is highly likely to not be put together by the BLS. And then that even puts into jeopardy the December inflation print as well. And the issue here is that some of these components are only they're only measured on a bi-monthly basis. So you skip a month, you start having some issues with data quality, and that can be used on both sides of the inflation argument to say maybe we shouldn't be trusting this housing deflation, maybe we shouldn't be trusting what we're seeing in terms of good inflation from tariff pass-through. So I think that'll be kind of the key argument moving forward. This continued discussion around can we trust the data and how good is the quality of the BLS data?
The data and just how the government functions broadly. To your point, we are now on week 4, going on week 5 of a government shutdown.
No end in sight.
No end in sight. It doesn't look like either side is moving, and that's starting to affect things like military pay, food stamps, a lot of the subsidies that are being given to farmers. This is starting to and could potentially show up in economic data down the line. Lots to discuss here when it comes to these markets and how we're going to piece together, I say, some of this price action. We've got the perfect guest lineup for you today. We're going to start off on this market story. David Sneddon, CEO and Chief Strategist over at Snow Hill Consulting, will be joining the program. And then, of course, it comes right back down to the bond market. Val and I just talked about all the risks happening that could affect, of course, the thinking over at the Federal Reserve. We'll see if Ella Hoja, the fixed income head over at BNY, agrees. At the market open, of course, we've got another stellar lineup. Natalia Lipakina, EMEA's equity strategy head from JP Morgan Private Bank, will be joining the program. And this is one that I'm really excited about. Charles Myers, a former U.S. government official, a chairman of Signum Global Advisors, he graces his presence right here in our London studio.
Yeah, let's see if he thinks that this detente between the U.S. and China is something that's going to last. Let's get you set up for the risk events for the week ahead. It is a busy week, both on earnings, on geopolitics, and on central bank decisions. Today, we monitor Trump's movements in Asia. He will be arriving in Japan in the next hour for a meeting with the newly minted prime minister. On Wednesday, we get the Fed decision. Will be very interesting to see what Jerome Powell thinks of that softer CPI print on Friday. We also get a ton of Mag 7 earnings this week. It kicks off on Wednesday after the bell. We hear from Microsoft, Meta, and Google. It continues on Thursday. We hear from Apple and Amazon. Remember, on Thursday is the key Trump-Xi meeting happening in South Korea. Some positive lines from Trump just an hour ago is saying he thinks they'll have a successful transaction at that meeting. We also have the Bank of Japan and ECB decisions to monitor. And then on Friday, Euro area CPI, the preliminary report for the month of October.
It's like drinking out of a fire hose, but it feels like Wednesday is going to be that key day, right?
Yeah.
The Fed decision, what we get out of from Jay Powell, but then ultimately those tech earnings and whether that signals a drop in CapEx, a drop in AI, a drop in the stock pressure. I mean, you name it. Everyone's kind of on edge.
Yeah, I think the AI monetization and the AI CapEx will be something key coming out of the earnings. Now, nice to know that we won't have to stay up that late this week to monitor both those earnings after the bell and the Fed decision because of the US-UK time delay is only 4 hours this week. The decision from the Fed comes an hour earlier, as well as these after the bell earnings. We also have a lot of European earnings to monitor. I think the key on my mind, Kriti, here is European banks. We'll hear from the likes of Deutsche Bank, UBS, BNP. A lot of the big heavyweights will be reporting whether they keep up with Wall Street's record numbers when it comes to trading. Revenue will be a key focus. We also hear from the autos, Volkswagen, Mercedes, and then towards the end of the week, we'll hear from some of these oil majors as well.
Yeah, a fascinating roundup when it comes to that. Remember, some of the profitability stories coming out of the automakers on both sides of the Atlantic is going to be something that could be really rewarded from this market. It's fascinating. The automakers are actually maybe having a good quarter. We'll see if that sticks come Wednesday. Here's what else you need to know this morning. In the pharmaceutical space, Novartis has agreed to buy biotechnology company Avidity Biosciences in a deal valued at $12 billion. It's the Swiss drug maker's biggest acquisition in over a decade. Avidity is developing experimental drugs to treat rare diseases, the deal adding to several potential blockbuster treatments for Novartis as generic competition looms for its current top sellers. And over in Argentina, President Javier Milei's party has won their midterm elections. The comeback gives him a stronger foothold in Congress to continue pursuing aggressive free market policies, which have won praise and a financial lifeline from U.S. President Donald Trump. And right back here in Europe, France's already fragile government of Prime Minister Sébastien Lecornu is facing fresh turmoil after lawmakers delayed a key vote on a proposed wealth tax. Debates on the measure were postponed on Saturday after discussions on previous budget amendments ran over time. A failed budget vote could prompt the socialists to file a censure motion, potentially dissolving the National Assembly and forcing new elections. I want to stick in France. They've got a lot going on this weekend. Police have now arrested several suspects in connection with the heist at the Louvre Museum. A manhunt was launched after 4 people broke into the museum and stole 8 pieces of jewelry, including royal necklaces, tiaras, and earrings. Authorities say one of the suspects was preparing to flee the country from the local airport. I don't even know where to start.
Why would you flee via the airport? Surely there's a lot of soft borders around France. Why would you pick the hard one? That was my basic question. But what do I know about stealing jewels and taking them across the country?
Hop on the Eurostar, get to a different Schengen area. It's a fair point. It's a fair point. But I thought what was interesting as well is that they can only hold the suspects for about 96 hours without charge. So the authorities and the prosecutors have to make a case very, very quickly. But without knowing where the stolen jewels actually are, that makes it tricky.
Yeah, well, coming up, we'll bring you details on that $12 billion Novartis biotech deal. Plus, we'll have the latest on the U.S. trade deals as President Trump touches down in Tokyo later this morning, follow his ASEAN visit. But up next, we'll check in on the markets and Fed rate cut bets after the soft U.S. CPI print on Friday. If you have any questions of your own for our guests, please send them to us on IB plus BBTV Go. This is Bloomberg.
Welcome back to the opening trade. Just about 40 minutes away from the start of cash equities open. Green on the screen when it comes to the futures picture. Does it stick? Bloomberg's Valerie Tytel is here for more. Val.
Global equities are trading at record highs off the back of this quite pleasing sentiment coming out of those U.S. and China trade negotiations over the weekend. MSCI Asia Pacific notching an intraday record high up 1.5%. And we're also adding to record highs in S&P futures up 0.9%, and NASDAQ futures really flying this morning up nearly 1.2%. Now, I want to mention that on the back of this risk-on mood, we are seeing treasuries fall in price. Those yields rise across the curve, maybe too upsetting to those treasury bulls out there that thought we might see a follow through from that soft CPI print. A lot of the treasury rally of Friday was even erased before Friday's close. So we're back above that 4% on that U.S. 10-year yield, higher by 4 basis points across that U.S. 10-year sector. Now, the key risk event for at least the treasury market headed forward is the Fed decision on Wednesday, an hour earlier than expectation. The decision at 6 p.m. The press conference, at 6:30. Now, it'll be very interesting to see what the Fed thinks of that soft CPI print last week. But don't forget, we have other central banks meeting this week. The Bank of Japan and the ECB both convene decisions on Thursday. Neither are expected to move on rates, but with a new PM, newly inaugurated in Japan, and the ECB having to deal with some narratives around falling inflation, perhaps we could get a sentiment shift from all three. Kriti?
Certainly going to keep this week interesting. I'm already kind of drinking out of a fire hose. Valerie, thank you so much. Let's get a little bit more analysis here. David Snedden, CEO and Chief Strategist over at Snow Hill Consulting, joins us around the table. David, lovely to see you on this Monday morning. Val and I were kind of trying to do some detective work in this bond market. A softer CPI print on Friday. We are seeing a series of shutdown delays across the board. We're seeing weaker consumer sentiment data as well on Friday, and the case for a cut getting bolstered. And yet, yields are up, bonds are selling off. Can you explain the logic?
I think. Good morning, by the
way.
Good morning. I think, as Valerie actually just said, I think the interesting thing actually was following that soft CPI print. Initially, yields were down, but then recovered pretty strongly, and yields were rising already on Friday afternoon, even before we've even come in today, and they've just followed on through that move today. I think what it does is maintains the market expectations of the cuts we priced in already. So market's pricing in most likely a cut this week, probably a cut in December. But more than that at the moment, I don't think that was enough. And I think the problem we have is this data vacuum that we're still in. And I think the labour market story, the growth story, is actually probably more important now to cuts rather than the inflation story. And we're in this vacuum of that still. And so I think the market's essentially in a holding pattern. I think for me, though, then what I like to do is combine that macro outlook with how do we sit just in terms of the price, how do we sit in terms of the technicals, and has this decline that we've seen in yields, we've seen 2 yields gradually move lower all year, we've seen 10 yields come down over the last few weeks, has it actually seen a bigger regime change? Has it taken us out of the regime that we've been in for the last 2 years? And it just hasn't. In fact, actually, the momentum into these lows of the last 2 years has actually turned up. And so actually, I think the move has been to fade this move into these yield lows and actually just look for this range to be maintained. And I think that is what we're seeing.
Do you think perhaps the Fed announcing balance sheet runoff to end sooner than expected, maybe they make that decision on Wednesday, could be something that could take treasuries out of their recent range? I
think potentially. I think the counter is we've still got a very pro-risk on move. Clearly, that's going on. Equity markets are clearly on a tear. Yes, I think the interesting thing on equity markets is it's probably down more to earnings there rather than data is going to be the key there. But it's a very strong risk on move. I think we're probably it's the labour growth story. I think is going to be the key thing for the bond market and for yields and for their directional move. And I think at the moment we're in a holding pattern. We're waiting for that. I think unless yields do decide to decisively move below, say, 385 in 10s, 380 in 10s, below 325 in 2s, I don't think you can say they're out of this sort of sideways range. And I think all you're doing at the moment still is playing that range. The curve is still sideways. There's been a stalling out of the steepening, but it's not turned lower. And I think, unfortunately, for rates traders, we're playing the range still, and we don't have that decisive trending phase coming through.
Well, we do have five of the Mag 7, shall I say, reporting this week. Perhaps some disappointment on CapEx spending or AI monetization could be something that could start to worry at least those on U.S. growth prospects. And maybe that could lead us a lower in Treasury yields and a breakout there. Do you think tech could really change the narrative?
I think so. I think that would be a thing that would affect not just Treasury yields, but the equity market as well. I think where the bump in the equity market would likely be coming in is the earnings disappointment or the AI sort of disappointment, none of which is coming through. In fact, earnings have been extremely strong coming through. Maybe we might see something in that this week. But at the moment, if you look at, there's talk about a bubble clearly going on there. Are we in a bubble? That's open for debate. But I think even if we are, that's a very different question to go. If it is a bubble, is it about to burst? And that's a very different topic of conversation. I don't know if it's a good thing or a bad thing, but I remember being in the market leading up to 2000 in the 1990s and the Nasdaq bubble then, and the conversations then were exactly the same, and it just went on and on and on, and the price moves with them were significant until it finally did. So for me, what I would look for in the equity market is just what are the underlying technicals, what is the underlying positioning. Volume's good, breadth is good, positioning. Depending on which measure you use, you can argue maybe it's a little bit offside in some, but if you look at, say, E-mini's positioning, it's still net short, not huge net long. So I think credit's still looking sort of fine. Some risk appetite measures are high, but they're not in euphoria. It's difficult to really sort of go, right, this is where we look for the bubble to burst. And I think at the moment the trend is still where the trend is. Yeah,
moving higher. And ultimately, what goes up has to come down at some point.
At some point.
But to your point, can you just marry the bond market credit story with the equity story? Are they related? 6 months ago, we were talking about a yield that could hit 5%, and that would perhaps be the camel or the straw that breaks the camel's back. Is there a level like that in the bond market that could spark bigger worries?
In terms of a move to the downside in yields, I think in terms of, I think the real yield is probably the more focus for me at the moment. I think that's more the much more neatly defined range. And I think if 10-year US real yields start moving materially below 160, sort of 155, then I think we're going to start to see a more significant, potentially sustained move lower in real yields. And then I think that will be a sign of concern that things are starting to change. But until that happens, and in fact, I think at the moment the opposite story is there. Actually, we're losing momentum into that sign. So the range looks like it's just still going to persist. And I think the risk-on phase just has to sort of still be given, the path of least resistance, for the want of a better phrase.
David, just quickly, what do you think is the key risk event in Q4?
I think earnings, I think the earnings story, I think for the equity market is still the absolute key. I think we've looked through weak data. I don't think there's that's been a knock on the equity market. So I think the big risk event for equities is earnings. Clearly, I think when we do get the government shutdown over, when we get sort of data coming back, that's going to be huge.
The volcano of data.
The volcano data, just the sheer amount of data. How does the jobs picture really look when that data comes through? So that will be the other key thing for me. But those are the two I'm really focused on.
All right, thanks for joining us this morning. That was David Sneddon, the CEO and Chief Strategist at Snow Hill Consulting. Thank you. Kriti, I think the other key risk event that I'm hearing more and more about is the Supreme Court hearings that are happening on the tariff case starting on November 4th, starting next week. I think traders will be really watching how the Supreme Court fields some of those original questions just to get a handle on where perhaps this case could go. But coming up, we'll return to President Trump predicting what he calls a successful transaction with President Xi later this week. We'll have the latest on the trade issue between the U.S. and China next. This is Bloomberg.
"30 minutes away from the start of the opening trade. Green on the screen when it comes to the futures picture. Risk sentiment is positive on both sides of the Atlantic. I'm looking at U.S. futures higher by 0.9%. That's on top of the record it already had hit on Friday. But you're kind of matched with some outperformers here on this side of the Atlantic, too. Eurostoxx 50 futures higher by 0.5%. The FTSE 100 not really keeping pace. We'll give it a little bit of credit for the 0.2% move that you are seeing. That is likely to get magnified, however, at the open. The CAC 40 as well higher by 0.4%.
Yeah, adding to those record highs when it comes to U.S. futures as well. NASDAQ up 1.2% on the back of this positivity. The risk-on mood means that we are seeing bond prices fall to start this morning's trade. Those U.S. 10-year Treasury yields are higher by 4 basis points. We're also seeing European bonds open higher in yield, lower in price off the back of this move. German 10-year yields are higher by 2 basis points across the curve. Now, President Trump says he expects to have what he calls a successful transaction when he meets President Xi of China later this week. Senior trade negotiators for the U.S. and China have reached a framework agreement, setting the stage for the leaders to finalize a trade deal come Thursday. U.S. Treasury Secretary Scott Bessent said he expects China to defer its rare earth export curbs.
I'm also anticipating that we will get some kind of a deferral on the rare earth export controls that the Chinese had discussed.
Okay.
But again, this will all be, my counterpart, the vice premier, and I have set the framework, and it will be up to the two leaders to discuss the final terms.
Let's bring in Bloomberg's Avril Hong, who is in Kuala Lumpur for the ASEAN summit. Avril, ahead of the meeting between the two presidents, both sides do appear optimistic. What's the reality on the ground?
Yeah, there is a lot of optimism, positive tone. Reality on the ground is there is a lot riding on this high stakes and the hopes that this momentum from positive tone will carry on into Thursday between Trump and Xi, and then establishing a sort of trade framework and a deal. Now, when we look at what has been negotiated by the two sides, you have the top dogs on these negotiation delegates, right? From He Lifeng, who is the vice premier, and among the chief trade negotiators on the Chinese side. And then on the U.S., led by Treasury Secretary Scott Bessent, we are seeing, though, that they have come together in the form of consensus on contentious issues, which, as you too well highlighted a short while ago, is really quite rare given the differences in negotiating styles between the U.S. and the Chinese side. So this is quite something that days before the leaders of these two countries come together, that they are actually seeing their deputies get things in a framework together on the same page. This is significant. Now, the reality on the ground, though, is there are a couple of nuances. You got to keep in mind that when it comes to some of these positive, optimistic tones on rare earths, for example, it's not like the Chinese are agreeing to roll back these restrictions entirely. And then on soybean purchases, which they're committing to buy more of, potentially, that's according to the U.S. side, keep in mind that there is only so much that the Chinese can buy. And we talk to analysts, they say that some of these Chinese crushers, they've probably already stocked up well into next year. So you've got to be realistic to your point about where things go from here as well.
Avril, fabulous breakdown of the China story with the United States. Of course, he is doing his entire Asia tour. There are other trade deals to be inked here as well with the new administration in Japan, conversations in South Korea. Walk us through some of the other trade deals in the region.
Yeah, and also worth noting that while he was here in Malaysia, the U.S. president did engage with a couple of ASEAN countries and ink trade deals with them as well. And part of that push was to iron out the critical mineral supply. Think of the likes of Malaysia, who are trying to move up the rare earth supply chain. So attracting investments in that regard. And you're just seeing there Trump landing on the tarmac in KL just a day ago with that dance and being welcomed by the Malaysian Prime Minister Anwar Ibrahim. Now, to your point about how from here on out he is arriving next in Japan, this is seen as a key test for the newly minted Japanese Prime Minister Sanae Takaichi. Not only is the first female prime minister, this is also seen as an early diplomatic test for her. There are a couple of things that stand out, right, for the Japanese, including as part of their trade agreements previously with the U.S., having the $550 billion in terms of investment pledges. But similar to what we saw with South Korea, they are light on details, no specifics, how this is going to be invested into the U.S. and come without this FX implications for these local economies. Think about how the Korean won has been very weak because of these very concerns. So when it comes to some of these renegotiations that could be underway, that is something that we have to keep an eye on as well. Kriti.
Bloomberg's Avril Hong there. Excellent as always, marrying the markets with the geopolitics. We thank you so much. Let's continue to do that with our next guest, Ella Hoja, head of fixed income over at BNY Investments Newton. Ella, pleasure to have you around the table. We were just talking to Avril there about the optimism coming out of some of these trade negotiations with the United States and various partners in Asia, as well as China, of course, the big one. I'm looking at a 10-year at 403. Can you just connect the dots for us here? Does that mean inflation goes away? Does that mean risk sentiment gets better? How do you interpret what's going on the trade front into the spot market?
Yeah, I mean, you're seeing some release in yields from Friday into today, obviously pricing some of the better news out of trade discussions. But, I mean, we also had a benign CPI print last Friday. And when you look at inflation swaps, they're roughly pricing inflation to be at thereabouts 3% for the next 2 years. So from that context, and also given some of the concerns, from pockets of the economy in the U.S., it makes sense that yields are more stable for the time being. Going forward, however, we have a little bit more concerns that your risk premia in treasuries, given the sort of balance for inflation going forward, is not sufficient. So we're erring more on the side of caution. For the time being, you can still continue with this benign price action in treasuries, but I think into 2026, the story might change.
Is this market pricing in the extreme dovishness that's coming out of the White House when it comes to not only what they're expecting the Federal Reserve to do, but some of the candidates that they're putting forward?
Absolutely. I think that's one of the reasons that, yields have been compressed despite the beginning of the year being quite a bit of a scaremongering for bond markets. But also it's been supported by the better inflation prints and some, as I was saying, some concerns around pockets like housing, for example, or even this private credit concerns that emerged over the last few months. So I think all of that is suppressing yields lower. But again, my point is all the balance will be made between if we have, as economists are projecting, let's say growth of about 4%, that's what the Atlanta Fed is telling you, yields at 4%, you're getting very little downside protection in terms of price action from bonds. So if things were to shift even mildly, that balance would tip over, particularly given the supply that we have next year. But so far, we have to say that the White House has been pretty successful at keeping yields in balance.
Ella, what did you make of the weakness in housing inflation in Friday's print?
Yes, I mean, that was good news. That's been pointed out by the leads, actually. What was interesting is the tariffs element is starting to show some concerns, right? So you're starting, the sectors of the economy that will be seeing some inflation from tariffs are actually starting to show in the inflation numbers. So we need to monitor those closely. So housing less of a concern. Perhaps this new area might be worth watching. But
given housing is such a massive component of core CPI, could one outweigh the other?
Absolutely, yes. I think that's a fair assessment. That's why you have to be a little bit cautious with this view on, I think inflation risks are increasing over the down the line, medium term. But short term, I agree with you. It's it's a more benign backdrop.
Let's talk about what's happening here on the side of the Atlantic when it comes to Europe. We're still talking about plenty of political chaos. We're about a month away from the UK budget as well. What is top of mind for you for Europe?
For Europe, I think the story on the inflationary side is far more benign. So we have been using these backups in rates to actually own a little bit more rates exposure there. Also, it's been a little more supportive on the credit side as well because Europe is less exposed to this private debt issue that's been kind of brewing. So on that context, it's offered some pockets to hide, if you like, if you're one of those that are a little bit more concerned on rate space, which we are. So in that context, it's good. On the growth side, some risks remain, we would say. So that's something that we are watching closely. So inflation more benign, growth perhaps a little bit less benign. Therefore, for bond investors, somewhat of a better space, all else equal.
Yeah, given we had the ECB meeting on Thursday, not a lot expected on the rate side. Are you expecting any surprises that perhaps she could deliver, Christine Lagarde, that is, deliver in a press conference?
Maybe not enough is priced for the ECB. I wouldn't say for this meeting because I really don't have a better angle in the market on that. But I think down the road, if indeed growth surprises come to the downside, given what's happening to global trade, then perhaps you can see some more scope for further cuts from the ECB.
Well, the ECB, I think the one thing they haven't done yet is really comment vociferously on what's going on in France and the geopolitical risk there. Is there contagion risk from the political chaos in France. The latest wealth tax vote was postponed from Saturday.
Yes. I mean, and of course, we saw the downgrade in terms of the credit rating. You know, look, I was one of those people that lived through the Eurozone crisis, so I remember it pretty vividly. And if I can say one of those that keeps me up at night, it's certainly France in terms of the list of candidates of fiscal concerns. And the timing of that is very, very difficult to say. But I think over the course of the next year, we can have what is already bond market concerns actually reignite further. So should they be worried about contagion? Absolutely. I mean, and that kind of peters through into the euro as well as spreads elsewhere. It's not showing for the time being, but I think if it so far it's been more idiosyncratic, but in the future it can become a risk, absolutely.
I imagine the Louvre heist isn't helping with that story either, Ella, but I won't ask you about the trading around that. Talk to us a little bit, though, about what that kind of line in the sand looks like. We've been having this conversation around French political risk for, I want to say 2, maybe even 3 years now as well. What gets it from the 80 basis point spread we're looking at to something even more concerning?
I mean, the classic route to these things coming to a head is typically growth. So far, growth has not been a major concern in Europe, right? So any sort of reignition of concerns on growth can bring this forward. That's number one. The second point would be if indeed rates rise higher, as I'm suspecting, into next year globally, then France is really, one of the larger borrowers. And so therefore, that can also be another window for spreads pricing potentially higher because the burden of debt is greater, not just on the public side, but on the private side as well. So those two I see as potential triggers, but they're very different from each other. And look, our job is not to predict, really, in my view. I mean, that's what I say to my team. It's really to prepare, right? So where are you getting good value given the mix of risks? And we say here, it's a much more troubled spot.
Ella, we also get a lot of earnings out of Europe this week. We have the oil majors reporting at the end of the week. We hear from autos, but we also hear from the big banks. We've got BNP, Deutsche Bank, UBS. Are you monitoring those for any hint of how European growth is holding up, given that's key to your view on where the ECB goes from here?
Yes, I mean, certainly on the bank side, those have been on a terrific run, given that the market is not pricing much on the rate side. It seems to be, for now, the steepness of the curve on the outlook on growth, which has been, as we said, relatively constructive. I mean, look, on European banks, we've been seeing a bit less value, so we've been coming off some of those positions there, mostly because, pretty good run, multiples, still cheap, but, you have to be a bit more cautious given everything that I mentioned, particularly the French angle. But broadly speaking, we are monitoring for sectoral messages. We're not seeing enough yet, right? But here it makes sense to be positioned a little bit more defensive on the cyclical side, particularly as some of those sectors have underperformed year to date. So, if you want to be a little bit contrarian, there are pockets like in healthcare, for example, and some of the consumer non-discretionary items that can offer some value here.
Certainly something we're going to be keeping an eye on. This week ahead should be an interesting one. Ella Hoja, head of fixed income over at BNY Investments Newton, joining us around the table this morning. We were talking there about the fiscal dominance, some of the budgetary issues coming out of France. It's no different right here in the UK. Now, the UK's chancellor is looking to accelerate trade talks with Gulf states during a visit to Saudi Arabia as she tries to boost the country's prospects. Rachel Reeves began a 2-day trip today, meeting chief executives and government figures at the Future Investment Initiative in Riyadh. The Treasury saying that the priority will be advancing progress on a trade deal with the Gulf Cooperation Council. Bloomberg's Jumana Bersetchi spoke exclusively with the Barclays CEO from the event about the UK's approach to business.
I think this government has been extremely friendly to the private sector and to the financial services sector and to banking. They recognize our importance to the UK economy and to the UK's role in global trade. And so we see this as a joint interest between the country and ourselves.
Yeah.
Well, coming up on the show, we'll return to M&A. Novartis makes its biggest acquisition in more than a decade, adding some potential blockbuster treatments for the Swiss drug maker. It's one of our stocks to watch. That's coming next. This is Bloomberg. We're 12 minutes away from the cash equity opening trade here in Europe. We are looking fairly positive for global equities, not just European ones, but Euro Stoxx 50 futures up 0.5%. Over on Wall Street, NASDAQ futures are up over 1%. S&P 500 also adding to record highs. Those futures are higher by 0.9%. Well, joining us now to discuss the markets and more is MLIV's strategist Skylar Montgomery Koenig, joining us for 3 minutes on the markets. Now, my key question here is, has the market already priced in all of the positivity we could possibly get from this Trump-Xi meeting on Thursday?
I mean, I don't think we're quite there yet, and I think we're going to have a lot of ups and downs before we get there. Now, China and the U.S. are the global growth engine. So when we were talking about 100% tariff rates, that was very scary because it was very negative for U.S. growth. It was very negative for China growth, but it was very negative for global growth. And that's really the concern here. And for risk assets, that's why you see a sell-off when you get escalation, and you see a rally when you get de-escalation. Now, I don't think we've quite priced in a full kind of resolution of this trade, but I think we're certainly headed in the right direction. And the reason for that is that there's a reason they de-escalated back in the spring, right? It's the U.S.-China trading relationship is more equal than any other relationship the U.S. has. The U.S. is reliant on China for rare earths, whereas China is reliant on the U.S. for tech. And so there's a reason that they want to make a deal more so here than elsewhere. And I think for equities in particular, unless you get something growth negative out of these talks, then you can have that momentum trend upwards.
So we're not worried about inflation anymore. We're not worried about how everything's going to get super expensive. We get tariff pass-through going to go to consumers. What happened to that narrative?
I mean, I'm still very worried about it, but I think more for the U.S. than elsewhere. So in the U.S., I think it's just delayed rather than removed entirely, and it's because we had that massive front loading. You also have different inventory cycles for different products, and you don't know what products really were front loaded and which weren't, or what kind of points you need to be importing different things. And so I think while it's less likely we get a very high peak, it means we stay above the Fed's target for longer. For these other countries, though, it's more disinflationary. So Europe, for example, that's where I'm thinking mostly, because you have a demand shock, but you also haven't imposed retaliatory tariffs. So you don't have that price level adjustment. Your weak demand means that there's certainly nothing feeding through the economy in a more menacing way. And for me, that means that you're likely to see a more dovish ECB into 2026, although it's highly unlikely we're going to get that shift at this week's meeting.
Well, we also have the Fed meeting this week, the Bank of Japan, also the Bank of Canada. Where do you think those surprises can come from?
Yeah, I mean, on the surprise list, ECB is the lowest. I think it'll be a relatively boring meeting. They've said for a while that 2% is where they kind of want to stay, and so you need something downside surprise-wise on inflation to change that. For the Fed, though, I think that's potentially more interesting, although last week's softer inflation print means that we're pretty sure we'll get a cut at this meeting. We haven't had a lot of data in the in-between.
Balance sheet runoff, do you think that could be a surprise?
I don't think it'll be the market doesn't really care that much because it's something that's been well telegraphed ahead of time. The Bank of Japan definitely falls up there more so in terms of being interesting because they could signal that they're hiking in December. Although, again, you're 2 months away from that. You know, there's not a need to signal that right now, and there's nothing priced for this meeting. So that leaves the Bank of Canada, which usually isn't top of the list, as potentially the most interesting. There's around 22 basis points priced right now. I think they likely will cut, despite the fact that they've got very sticky inflation, because they're still dealing with those tariff issues, and that's really putting downside on their growth prospects. If they do cut at this meeting, that brings them to the bottom of their neutral range. And I think the question from here was, if trade negotiations are going so poorly between the U.S. and Canada, you can't close the door on more cuts. And so that could weigh on CAD.
All right. Bloomberg MLIV's Skylar Montgomery Koenig, we thank you so much. You get more up-to-date analysis from her and the team. MLIV Go is the function on your terminal. Let's go from the macro to the micro. Here's stocks to watch with Chloe Melly. Chloe.
Good morning, Kriti. Let's start with Novartis today after it made its biggest acquisition in over a decade. So it's agreed to buy a biotechnology company called Avidity Biosciences in a deal that is worth $12 billion that will give Novartis access to some potentially blockbuster drugs, which is really important given that a lot of its top sellers are facing the threat of generic competition in the next few years. So we could see that the news of that major deal boosting the shares in Novartis this morning. We've already seen that it has been outperforming some of its closest peers, with Sanofi and Roche trailing behind a little bit. So we'll see if we get an additional boost on the back of that major deal and what that really means for growth at that company. Moving on to Porsche, to the car sector. Porsche reported its first quarterly loss after taking a 3.1 billion euro hit from US tariffs and its decision to scale back on its electric vehicle ambitions. This is coming after the guidance cut that we saw last month from Porsche, which was the fourth guidance cut this year. And that's, of course, reflected in a lot of weakness in that stock over the last year. But there are reasons to be optimistic from that statement. Some analysts are saying that the loss was actually a little bit smaller than expected, and the margin was also quite respectable. So that could potentially boost sentiment, despite the fact that Porsche is dealing with all of those challenges. So we'll see how the shares are behaving this morning for Porsche. And finally, Gerresheimer, which is a German company that makes packaging products, could be on the move today after saying that its own probe had found probable accounting issues. So last month, the German financial watchdog had opened an investigation that had led to a massive dip in the shares we could see around here around September 24th. And Gerresheimer had originally disagreed with the finding, but now it's turning around and saying that the regulator might have been right. So we could see additional weakness. This is a stock that's already been quite weak because of outlook cuts, dividend cuts. It's unlikely to see any relief this morning.
All right, thanks to our Equities reporter, Chloe Milei, running us through the stocks to watch ahead of the European Open. And Kriti, again, the U.S. time zone, 4 hours. So we'll get also pre-market open at the top of the hour in just 6 minutes' time. I'm going to be watching to see how NVIDIA shares react to this, because as you mentioned, there really was no breakthrough when it came to semiconductors. But perhaps the tech side of the market will read a breakthrough, read this better than expected trade relations between the U.S. and China as something positive for the sector.
Absolutely. It's a fascinating one, of course, ahead of all the earnings that are coming up in the rest of the week. There's a couple other sectors we want to keep an eye on as well. Drink makers in France, especially luxury as well. If we're talking about a breakthrough in, as Skylar was saying, the world's two largest economies, does it have a read-through in some of those exposed sectors? We're talking about mining, we're talking about ship makers in the shipping industry as well. There's lots to look at when it comes to the opening trade. We are just 5 minutes away from it. Futures looking positive. Does it stick? This is Bloomberg. A few minutes ago until the opening trade. If you look at the futures picture, you would maybe assume that there was some sort of sell-off on Friday. Let me assure you, there was not. In fact, you saw the market end at a record when it came to both when it came to the United States, even though we did kind of see perhaps a little bit of a sell-off in those last 30 minutes. That's really where that blue line ends. But I think it's crucial here that you also ended here in Europe on a high note. So when you look at the futures picture and see the green on the screen, I think it is extra surprising to see that you are not only building on top of a record that usually, Val, sets us up for some sort of pullback, and yet Euro Stoxx 50 futures are higher by about 0.4%. The DAX higher by 0.3%. Even the CAC 40, the French index, which we know has that political overhang, is rallying this morning. Here's where you're seeing the pain, though. It's in the FTSE 100. It's actually pulling back a little bit. And Val, I wonder how much of that is an energy story.
And perhaps a wider commodity story. We know gold is on a back foot as well. Some of those gold miners are heavily listed here in the UK. We do have a few stocks that we'll keep our eye on ahead of this open in 50 minutes time. One of those being the Swiss pharma giant Novartis. Over the weekend, there was news that they have agreed to buy Avidity Biosciences, one of their biggest acquisitions in over a decade, in order to boost up their drug pipeline when it comes to experimental drugs for rare diseases. Also have an eye on HSBC. Some news that they have set aside over $1 billion to cover litigation from Madoff fraud. So keep an eye on the banking sector that could possibly weigh on shares here in the UK. Lastly, autos, they're going to be a focus this week. Not only do we have autos reporting, we have VW and Mercedes later in the week, but Porsche was out with earnings late on Friday. They reported their first quarterly loss since its IPO late Friday. Kriti?
Lots to watch when it comes to the individual stock movers. Remember, we've got an earnings season on both sides of the Atlantic ahead of us. Let's see how these markets are interpreting the events of the weekend. Green on the screen in the futures picture. Does it stick? Right out of the bat, we have a FTSE 100 that's slightly tilted to the negative. As Val was talking about, we do have that commodities sector kind of overhang a little bit, a pullback in the gold sector. Just in the last, I want to say, hour or so, you've seen oil also take a foot lower. And I think that's really crucial here as well when we're talking about the fact that in a positive trade negotiation environment, it should actually go in the other direction. So that's going to be something that we're watching. But take a look at what's happening in other parts of this market. The French index, the German index, the Spanish index, all opening higher. So the détente, Val, positive for continental Europe.
Well, when it comes to those stocks that we were watching, we did have HSBC open up down 2%. So one of the worst drags on the index when it comes in terms of point. That also dragging down the banking sector this morning. At the top of the basket, though, Kriti, we are seeing basic resources up there. The oil is rebounding on the back of this positivity when it comes to U.S. and China trade relations. We're also seeing technology, one of the top performing baskets. So there is some follow through, even though semiconductors weren't necessarily discussed between the U.S. and China. A better framework for trade negotiations is looking like it is boosting the likes of ASML so far this morning. That's one of the biggest gainers to the top side. At the bottom, we have healthcare, chemicals, and utilities dragging on the wider index.
Lots going on in terms of the sector story. I think it's fascinating that you are seeing that tech outperformance, which, to your point, Prosus is, I think, one of your biggest movers to the upside, Schneider Electric, among others. The banking sector seems to be taking a little bit of a hit. Remember, we do have one eye on HSBC. They're dealing with a court case, I believe, that is looking to be a little bit of a weight when it comes to that stock. Trading with heavy volume, though, when it comes to those individual movers. I think this is really crucial as well because, again, we're talking about positioning at the start of this week ahead of plenty of earnings, plenty of central bank decisions, and, of course, trade and geopolitics front of mind as well. And as I mentioned, trade and geopolitics, I'm going to get a little bit more market analysis in just a moment. But I'd like to inform our global audience that we have seen Air Force One, the plane, of course, carrying Donald Trump and his cabinet members, landing in Tokyo. You can see a live shot there. We will, of course, bring you any headlines that come as he looks to deplane. But that is something that we have our eye on, of course, in Tokyo. But, Val, it feels like this week might just be dominated by kind of the holy trifecta, if we can, the geopolitics and trade, the central banking decisions, and, of course, the earnings story on both sides of the Atlantic. So on Friday, we might just have all our answers.
Yeah, blockbuster earnings. We need a dovish Fed, and we need some good news coming out of this Xi and Trump meeting on Thursday, and then we can really go to the moon when it comes to global equity markets. Well, joining us now to discuss this and wider markets is Natalia Lipinka, the head of EMEA equity strategy at JP Morgan Private Bank. Now, we were just talking about all these scenarios this week that could lead us higher in the equity market. We've already seen such a surprising reaction in U.S. equity futures. What could really add to this fuel when it comes to the meeting and this discussion on Thursday between the leaders of the world's two largest economies?
I think the market, and by the way, good morning. I think the market was looking forward to seeing the trade negotiation kind of being in a better than expected mode, and we're starting to see that. The market understood that most likely the peak uncertainty was already in April this year. And it's interesting, especially a lot of companies are reporting their earnings right now. And what we're seeing is that a lot of companies are able to mitigate the tariffs. Mm-hmm. So clearly, the way the market looks into it is, well, it's great news, what we're seeing over the weekend. If you add the earnings season, that, by the way, is already coming at stronger than expected, and potentially a dovish central banks, especially the Fed, that's probably how the equity market can propel higher from here.
Yeah, the Mag 7, we get 5 of them reporting earnings this week, a bulk of them coming on Wednesday. We also get Apple and Amazon on Thursday after the bell. Where are you looking for weak points in these tech earnings that seem to be driving much of the multiple expansion this quarter?
So it's very interesting because if you look into year-to-date performance, Mag 7, the majority of the move is actually earnings-driven. And that's why, the market is very comfortable with where we are right now. Now, what the market will be watching very, very closely is CapEx, for sure. Mm-hmm. CapEx and free cash flow. If there is a bit of weakness on the free cash flow side from those companies, the market may not see it positively. But we think even if there is a dip this year, it most likely will be temporary. And those companies will be able to have a very strong free cash flow next year.
When it comes to you mentioned the CapEx and you mentioned the free cash flow, but why is the market not trading on margin compression right now? I mean, if the entire narrative of why tariffs are not hitting the end consumers, that companies are absorbing it, shouldn't the stock reflect that?
Well, it's interesting because not all of the companies are absorbing that. A lot of companies are actually passing them through. Some of the companies are passing that to consumers where, we're seeing the price increases. So it's really a mix and match of different things. From a market perspective, I think what the market really cares is whether the companies are in general able to mitigate that tariffs at all. And we're seeing that. And this earnings season, some of the companies actually increased their guidance because the tariff impact is just lower than what the market expected.
Which is fascinating. It comes right back to your point about free cash flow. But it also reminds me of a little bit of a throwback to COVID, when it felt like the markets or the stocks that had more cash on their balance sheets were the ones that were getting rewarded to be able to absorb the extra supply chain costs, which was the narrative at the time. Is that factoring into some of these valuations, that if you have trillions or billions on your cash, on your balance sheet, then you're actually rewarded by that? From this market?
Well, it's interesting you mentioned COVID, because in COVID times, if you remember, loads of companies withdrew their guidance. And a lot of people expected this year to be a very similar one. Now, in fact, a lot of companies not only maintaining this guidance, but this quarter we're seeing some of the guidance raises, which is a very different setup for COVID. Yeah. Now, if you compare that to the tech companies, absolutely. And the reason why people are still very comfortable with the Max 7 is because of the very strong free cash flow that those companies are currently having.
We supposedly are going to get a big debt raise tied to Oracle data center build out. Last week, Bloomberg was reporting it could be around $38 billion of debt issued for these Oracle tied data centers. Does the kind of shift from these hyperscalers and this extra free cash flow to having indebted tech companies, is that something that worries you for the long-term trajectory?
So we're definitely seeing a bit of a shift, just given how, big and quick this capital raise is. But if you look into the rest of the Max 7 or Tech Plus companies, a lot of them actually have net cash on the balance sheets. So overall, we're not concern about what is happening, because the majority of them have a very, very strong balance sheet that can absorb that capex.
And turning to Europe, we do have a lot of earnings here as well. We've got big banks reporting. We also have the autos reporting and some of the oil majors reporting at the end of the week. What surprised you so far about European earnings season, and what are you looking forward to this week?
I think it's really fascinating what's happening in the earnings season this quarter in Europe, because we're seeing a bit of a shift. What worked in Europe this year is domestically oriented companies that didn't have any FX, didn't have any tariffs impact. And now you're seeing a bit of a switch to international companies. So think about multinational companies based in Europe that were hit by tariffs and strong euro. And we're starting to see a bit of a flows back to those sectors. Luxury is a great example of that. The sector that people forgot about was not very enthusiastic, but we're seeing a very strong earnings season coming through, much better than what people are expecting. So we're seeing a bit of rotation in the market right now.
Is this market just getting lucky, though? I mean, and I say this because we're talking about a range-bound bond market, a range-bound commodity market, a dollar that hasn't really moved for a couple of months either. Is this market getting lucky with all the cross-asset cues?
I would say the equity market is just in a gridlock right now, and they're really enjoying it right now, because when you look into the earnings, ultimately oil earnings is what drives the market, and we're likely to have double-digit growth in earnings this year. And we're likely to see another double-digit growth in 2026. So when we look into the equity market overall, there is a very good strength driven by earnings. And therefore, equity markets continue to drive all-time highs. Having said that, we still think that there is a more upside in the equity market, as we're talking more and more positively about the bull case.
Talk to us, though, about the potential risk events on the horizon. I've asked guests multiple times, what's the key risk event in the fourth quarter? And many of them answer the Supreme Court case against Trump tariffs. Hearings do begin next week. Is that something that's concerning you, given your enthusiasm for the equity market?
I think the biggest risk to the market is still coming from the tech earnings. If we are not seeing, those earnings coming through, if we're not seeing that, the next year's double-digit earnings can be supported, I think that can be the risk to the market. Alongside the 493, if 493 just can't catch up with the tech earnings, this is where we may see a pullback in the market.
When it comes to the currency exposure, how are you thinking about that, though? I mean, Guy's favorite question, I'm going to channel my Guy Johnson vibe here. Guy's favorite question is that if you are an international investor, are you getting penalized on the currency exposure, not getting as much kind of win when it comes to investing in the U.S. stock market? Does a euro dollar, and I'm just going to pull it up really quickly, does a euro dollar at 116 matter?
Well, it's an interesting question, because if you look into the move this year, we went from 102, so very close to parity, to 116. So we already had a very pronounced move this year. Now, we still think that the dollar may weaken. Let's call it 118, 120. But in terms of the impact should be much smaller from what we've already seen this year.
Does that apply then to, do we need to be paying attention to the divergence between Europe and the U.S. when it comes to outperformance at all?
Maybe a bit. FX is still a kind of a center topic for many investors, just given the moves that we have seen this year. But again, we think that they're probably taking a second stage at this point. I think what matters for in general, the diversification right now is the Fed is cutting. And that is actually positive for not just the US, but also the international markets. We're seeing, with the open today in Europe, European market is up quite nicely. We're seeing the same in emerging markets, right? We're seeing that with the China. We're seeing that with the Indian markets. So overall, I think that is a very good backdrop for the global equities.
Absolutely. Natalia Lipakina, head of EMEA Equity Strategy over at JP Morgan Private Bank. Thank you so much. As she was speaking, we did see Donald Trump deplane. He has, of course, officially arrived in Tokyo, due for, I believe, the second stop on his Asian tour. He'll be going to South Korea later this week to have that high-stakes conversation with his Chinese counterpart, President Xi Jinping. Already, of course, a very quick turnaround when it comes to the conversation in Malaysia.
So he is arriving in Tokyo. He's due to meet with the Japanese emperor today, and then he goes on to have a working lunch and meet with Takaichi. That's the newly minted prime minister, who is a fan of Abenomics, of loose monetary and loose fiscal policy, and someone Trump has spoken very fondly of. So I guess a big moment for the new Japanese prime minister in order to strike up positive foreign relations with their U.S. counterparts.
Yeah, it's a really fascinating one as well, because we also know that the Japanese have come through a new administration change. Sanae Takaichi is, of course, now at the helm of the government. And one of the key things that was negotiated underneath her predecessor is a $550 billion investment promise into the United States. What that actually looks like is a completely different story. And does it actually stick when you do start to see her administration come forward? Remember, they're still dealing with inflationary issues, fiscal promises, some that even come contrary to what the BOJ might be pushing for.
And Takaichi is very hawkish when it comes to national security. So I think that'll be on the table for discussions today, whether the U.S.-Japanese alliance is still strong, at least in a military guise. So key topics on the agenda today could be ones of regional security, should I say, particularly among China's assertiveness and North Korea's provocation. So we'll keep an eye on how geopolitics, as well as the trade negotiations, take place between the U.S. and Japan today.
Yes, fascinating one. He did, of course, also say that he was looking forward, if he can, to meet Kim Jong-un. No schedule on the agenda, no meeting on the agenda, I should say, but it is something, and I believe a press gaggle a couple of days ago, he said he would be interested in. We are, of course, seeing him get on the helipad there to get to his next stop. We'll keep you apprised of all the headlines as we get them. In the meantime, let's get a check on the core six, the heavyweights, of course, that tend to move this market. And what's really crucial here is that it is green on the screen on the index level, but when you look at some of these individual movers, you aren't seeing that much excitement. In fact, I'm kind of surprised to see this. Novo Nordisk taking a little bit of a hit this morning, down about 1.3%. LVMH also taking a hit despite positive U.S. and China relations. At least that's the narrative on the broader index level. You'd think that would have a read-through in some of the energy and luxury stocks. Not today. Tech very much in the driver's seat. Let's get a check on some of the other individual stocks on the move. Chloe Melly is here for more. Chloe.
Good morning, Kriti. So we have got green across the board for those miners today on the back of copper advancing to close to an all-time high, which is, of course, due to the fact that China and the U.S. are making progress on those talks to ease those trade tensions, with Trump's threat of 100% tariffs now completely off the table. So copper advanced as a result of that, and that is in turn boosting those miners this morning. In particular, Glencore is up 1.75%, but we've got kind of green across the board for that mining sector this morning. Moving on to Porsche, which is also moving higher. So, Schneider Electric first, which was upgraded to an overweight rating at Morgan Stanley. This is a company that is exposed to the data center sector, and it's doing pretty well, has been doing pretty well over the last few months, and it has now been boosted and been raised to an upgraded to overweight rating. Moving on to Porsche, this time we actually have Porsche, which posted its first quarterly loss since its IPO, and said that was because of U.S. tariffs and because it scaled back its electric ambitions. But the reason why it's moving higher, quite a lot higher this morning, up 4%, is because analysts are saying that that loss was smaller than expected, and the margin is actually also much more resilient than expected. So that kind of raises hopes of a potential turnaround for Porsche, which is a company that has cut its guidance 4 times this year. So it really needs that relief. Moving on to Basic Fit, which is an operator of gyms and fitness clubs. It has bought It has bought its rival Cleverfit this in a deal that was worth about 160 million euros. It was actually moving higher at the open and has now seems to have retreated all of those gains. So this is a deal that potentially is not being welcomed that warmly by the market. And finally, EDP Renovalis, which is a renewable energy company, has been cut to a hold at Deutsche Bank, and we are seeing a lot of weakness in that stock. As a result, we are down 3.2% for their renewable energy firm.
All right, Chloe Milei from our equities team, thank you for running us through the stocks on the move in the first 15 minutes of trade here in Europe. Coming up on the show, we'll discuss one more, a $12 billion biotech deal from Novartis. We'll have more on the Swiss pharma giant's deal and what it can mean for the sector. That's next. This is Bloomberg. Welcome back to the opening trade. We're 20 minutes in to today's cash equity session here in Europe, and we are petering out some of the early gains. Euro Stoxx 600 is trading around flat as we speak. We have the CAC 40 flipped to the red, down 0.2%. We should note that there is still a lot of risk on excitement when it comes to U.S. equity futures. S&P 500 adding to record gains as we speak, up 0.8%. NASDAQ futures up over 1% as well. Now over to biopharma. Novartis has agreed to buy Avidity Biosciences in a $12 billion biotech deal, the biggest acquisition for the Swiss drug maker in more than a decade. Joining us now is Bloomberg Intelligence senior pharmaceutical analyst Sam Fazeli. Sam, thanks for joining us on the show. What does this deal tell us about potential M&A activity across the pharma space?
Well, good morning to you. So this is, by my count, we keep a tally of this, of course, Bloomberg. This will be the 21st deal for 2025 where large pharma companies are buying a biotech. Of course, there's many more deals when biotechs are buying biotechs. We saw one a couple of weeks ago for Genmab. Here, this is Novartis, which needed to do a deal to bring in assets that would help them to keep their growth momentum post-2029, post-2030, after one of their drugs, Cosentyx, is going off patent. If you look at our MODL function, you'll find that the revenue for Cosentyx, a big drug, $7.4 billion by 2029, is beginning to decline from that point because there's biosimilars coming. So the company needed, and this is a really good fit for Novartis. And as I said, this becomes the 21st deal where large pharma is buying small biotechs, and it really helped. These spate of deals has helped the biotech sector take off.
Well, how well received is that, Sam, when it comes to some of these major kind of pharmaceutical companies that are looking to perhaps make these acquisitions globally and, of course, in the United States in the face of always the tariff threat that seems to be looming over every sector's head? Just kind of connect the dots for us here.
Yeah, so I think what you might notice is that since kind of the end of the summer, the spate of deals, biotech, and large pharma biotech has picked up a little bit. And I think that's because we've got some levels of certainty now into the conversation with regards to the most favored nations, tariffs they've got a reprieve on. So I think the whole setup here, as the companies are doing more and more deals on those pricing conversations with the administration in the US, has given them confidence to be able to go and do this and not feel overexposed in terms of risks. And one thing to note here also is that the deal that Novartis is doing is for assets that we call for rare diseases. So they are orphan drugs, which are often much less scrutinized in terms of pricing and regulation and maybe the Inflation Reduction Act impact than standard drugs large diseases. So here, this is also another advantage for the deal between Novartis and Avidity.
Sam, a pleasure to have you, as always, putting that deal into context for us. We thank you so much. Sam Fazeli of Bloomberg Intelligence joining us this morning. It's another sector that we've got our eye firmly on. HSBC, one of your heavy volume stock movers this morning, due to set aside $1.1 billion to cover litigation by investors who lost money in Bernie Madoff's fraud in a case which dates all the way back to 2009. Talk about a throwback. Shares down about 1%, we'll call it. All over the stories, Bloomberg's Tom Metcalf, who leads our EMEA finance and investing coverage. Can you just walk us through the details of this? We haven't heard Bernie Madoff's name in a while.
Yeah, exactly. It's a sort of throwback, as you say. It's coming out of a Luxembourg court decision on Friday, where effectively they rejected HSBC's appeal. So what's happening is a hedge fund who lost money on the Madoff scandal is basically suing HSBC both for securities restitution and also a return of cash. And what the Luxembourg court did was, I think it threw out the cash sort of request, but did sort of stand behind the idea that securities HSBC may need to sort of effectively pay this fund back. And it's really interesting. It's been a long overhang, obviously, on the legal side. And kind of catching everyone by surprise to come out with a 1.1 billion hit like a day before earnings. It's definitely something that HSBC can manage. But, of course, no firm out there wants a surprise, 10-figure potential provision.
What's the legal process from here, given this case has been pretty long-standing?
Yeah, exactly, from 2009, right? So HSBC said in their statement they're going to appeal again. And so I think, this provision, might prove to be overkill. It might not be entirely needed. But, as this winds through the courts, HSBC have basically made the call that, look, it's not going away, and let's remove this as a sort of potential cost. And perhaps in future, if we are, able to win our case in the courts, we can kind of write it back.
Talk to us a little bit about the earnings. I should say, sorry, not the earnings, the M&A story broadly here. Your team has put together a story that I've been obsessed with for a very long time, since my time here in London. But just walk us through kind of some of the threads that you're seeing when it comes to M&A across the various regions of Europe.
Yeah, so the story's like a look at all the M&A we've been seeing in the banking and finance sector. And, the sort of key message there is all the sort of real big deals probably bankers, spend their time dreaming about. They're not quite coming through. But the level below that, there is so much activity. And I think today we just saw some Nordic bank merger again, just kind of that kind of sense of quite a lot of national deals. But when you get to the real game-changing ones, so the UniCredit Commerce Banks or the BBVA Sabadell even, you're seeing a lot of government pushback, and that's probably not going anywhere. And it just speaks to this idea that it's always complicated in the EU, just because there's so many governments, so many regulators. Yeah. So, the story is really about, yes, you'll be hearing a lot about M&A, but it's probably, that one level down from the kind of real blockbuster deals.
All right, Bloomberg's Tom Metcalf, thank you. Busy week for European banks, not just because of these cases, but also European earnings. We get Deutsche Bank, BNP, UBS later in the week. We'll be keeping an eye on those. Let's check in on how the U.S. market is faring. Indexes, when it comes to U.S. futures, are trading close to session highs. NASDAQ 100 futures up nearly 1.1%. S&P futures up 0.8%. Kriti adding to record highs that we already notched on Friday after that softer than expected CPI report. Remember, we do have U.S. pre-market open at the moment because of the time change between London and New York this week. NVIDIA shares are rising in the pre-market off the back of this optimism around U.S.-China trade tensions easing. NVIDIA up over 2% so far in U.S. pre-market trade.
I mean, that sentiment is just kind of lifting all tides, at least when you go to, or lifting all boats, the tide that lifting all boats. That's the phrase I'm looking for. And you can really see that. I mean, just the fact that you're seeing, starting to see some of the stocks in Europe take a little bit of a pullback is fascinating. When it comes to the rare earth story, remember, Scott Bessent had talked about a delay of something like a year when it comes to having that rare earth conversation, the export controls that Beijing had threatened to enlist. Nevertheless, you are seeing some of that rare earth momentum take a little bit of a pullback. We'll dive into this next. This is Bloomberg.
This is the opening trade. We're 30 minutes into today's cash equity session, and European equities are not feeling the excitement of their U.S. counterparts and those record highs notched in Asia. We do have the Euro Stoxx 600 essentially trading flat this morning. Some gains for the DAX, but just slightly up 0.1%. The CAC 40 is in the red, dragged down by shares of LVMH this morning, and the FTSE 100 is trading flat. Kriti, what's going on under the hood?
Well, it's fascinating because you do kind of see this divergence in some of the indexes here. Volume's a little bit lower. Everyone's taking a beat beat. Everyone's taking a breather, maybe bracing for what's going to come throughout the rest of the week. You are seeing volume down about 25. We'll round it up, down about 25%. It feels kind of a split market when it comes to hires, members moving higher and lower. Let's just focus in on some of the gainers, though, because broadly it is risk positive, as you just laid out in your index check. And a lot of it seems to be tech driven. Remember, we have tech earnings and perhaps already some of that momentum showing up in the names and likes of ASML, Schneider Electric, and Processval.
Well, here's what else you need to know this morning. Treasury Secretary Scott Bessent has confirmed the names of 5 finalists to succeed Federal Reserve Chair Jerome Powell. The candidate pool has narrowed. Current Fed board members Christopher Waller and Michelle Bowman, former Fed Governor Kevin Warsh, White House Economic Council Director Kevin Hassett, and BlackRock executive Rick Ryder. President Javier Milei's party has won the midterm elections in Argentina. The comeback gives him a stronger foothold in Congress to continue pursuing aggressive free trade market policies, which have won praise and a financial lifeline from Donald Trump. And lastly, Donald Trump says he expects to have what he calls a successful transaction when he meets President Xi of China later this week. Senior trade negotiators for the U.S. and China have reached a framework agreement, setting the stage for their leaders to finalize a trade deal. Kriti?
Lots going on when it comes to this Asia trip. Let's get a live report from the location. Bloomberg's chief North Asia correspondent Stephen Engel joins us live from Tokyo, where, of course, the president has just touched down. Stephen, pleasure to have you on the program. He's in Japan today. What sort of impact is his visit having?
Well, it's actually had a great impact on the stock market here, with the Nikkei 225 soaring above 50,000. It's up 2.5% today. That on the back of some positive sentiment for the new prime minister, Sanae Takaichi, who essentially has already had a phone call with Donald Trump. She is planning to meet him tomorrow, and Donald Trump is already on Air Force One as he flew up from Malaysia to Japan, talked about announcing a great friendship with the Japanese and with the new prime minister. So they have some things in common. They're both considered to be quite nationalistic leaders with a strong emphasis on defense, and that is something Takaichi-san has been talking about, and it's helped boost her positive rating to a certain degree. Defense spending increases in Japan is a very controversial subject, obviously because of the pacifist constitution, but her strong leadership in the opening week has parlayed into a very strong approval rating. The Nikkei newspaper is saying her approval rating is upwards of 75% right now. Other surveys say about 56 to 65%, which is pretty good considering Japan has come from a revolving door in the prime ministership over the last few years. So I think it's going to be a very interesting dynamic between these two leaders who have not necessarily met, and that they're already getting off on the right foot, saying the right things. Now, are they going to try to revisit the trade agreement that Japan and the United States signed in July? I'm not so sure that Donald Trump would accept that. Will Takaichi-san try and convince Donald Trump that they need Russian LNG? Donald Trump says he's going to try and convince the Japanese to wean themselves off that fuel from Russia. So there's lots of issues to be discussed in the next day and a half before, of course, Donald Trump heads off to Korea for that much anticipated meeting with Xi Jinping on Thursday.
And Stephen, ahead of that meeting on Thursday, President Trump and Xi will be meeting. Both sides appear optimistic. Even the markets look very optimistic. There are some possible curveballs that we should have in mind.
Oh, there are always curveballs in the U.S.-China relationships. Keep in mind that we've had about 5 different rounds of trade talks with Scott Bessent and his counterpart He Lifeng of the Chinese, whether it's in Geneva, London, and more recently Malaysia yesterday. And there's been fits and starts, each side trying to gain some leverage ahead of this big meeting on Thursday, because both sides want deliverables, to use State Department parlance. And the deliverables so far from both sides indicates that the two sides have come up with a framework agreement on export controls on both sides, including rare earths from the Chinese. Possibly, Scott Bessent talks about the Chinese possibly buying soybeans from the United States, even though we're already about 2 months into the harvest, and the Chinese have not bought any U.S. soybeans yet. So there's a lot of politically hot-button issues that need to be addressed. Whether the two leaders are going to sign off on all these checked boxes by their trade negotiators is yet to be seen. We'll have to see what the dynamic's going to be like on the sidelines of the APEC meetings going on in Gyeongju, which I'll be at as well, leaving here tomorrow to go to Korea for that APEC gathering.
Well, Stephen, we look forward to further updates from you and the team. That was Bloomberg's chief North Asia correspondent, Stephen Engel, on the ground with President Trump. Joining us now for more on geopolitics and on trade is Charles Myers, the chairman of Signum Global Advisors. I just want to start off, with your basic opinion of what's happened this weekend. Are you as positive as the markets are on this breakthrough between Scott Bessent and his counterparts in Malaysia?
Yes, absolutely. I think President Trump doesn't really go anywhere without really good news following his visits. And they've even been teasing this one now for several days, which I think is two things with China. First, confirmation that the TikTok deal will get done and is a very positive outcome for U.S. investors in the company and ByteDance. But secondly, a soybeans purchase ultimately for, some, tariff relief, et cetera. So I think that the overall tone is going to be de-escalation. I don't think we see tariff rollback necessarily, but certainly not an increase in tariffs. So I think that there will be several deals announced. I think the tone is positive, both with President Trump, President Xi, but also his visit to Japan. I think there's going to be some positive news out of that as well.
When it comes to what the market is really concerned about, which is these rare earth export controls, we had Scott Bessent teasing that perhaps they would be delayed for a year. In your opinion, is that still a win for the U.S.? Is a year a long enough time for the U.S. to buffer its supply chain for these materials that are needed from everything from technology to defense?
Yeah, and I do think that there will be an announcement on rare earths as well. In fact, I think the deal is rare earths for soybeans or some version of that. But is a year long enough? No. But it gives the U.S. 12 months to strike deals with some of our allies to be able to source, friend source or near source critical minerals. It enables the U.S. government to do what they've been doing, which is actually take stakes in rare mineral companies to help over the long term secure, again, a more safe supply of rare earths. So it gives the U.S. time to act while still being able to import from China.
One of the things I think China has been really excellent at has been diversifying some of their sources. And we just had a chart up there talking about that soybeans purchases. This has been a key sticking point between the relationship between the United States and the likes of Brazil, which we've heard in the last 24 hours. Looks like they're friends again at the end of this story. How much of some of these trade relationships that are getting inked between the United States and some of their peers directly correlates to said country's relationship with China?
So I think part of the overall strategy, aside from everything being from a U.S. perspective and from President Trump's perspective, America first, there is part of that strategy is to peel some countries away from China if possible, to try to put a bit of distance between some of these countries. And I think the very friendly on the sidelines meeting with Lula from Brazil, for example, is a great example where President Trump again, has no fixed ideology and wants to negotiate with everyone. He believes in talking with everyone, even those that he's had some pretty harsh words with over time and that may be seen as too pro-China. It's part of a broader strategy. We'll see if it actually leads to anything with Brazil specifically, but I have to say President Trump just pulled off a major election win in Argentina yesterday, for example. So he's doing a lot more around the world. I think he deserves credit for the Phase 1 peace deal in Gaza. I think he deserves credit for the release of the hostages. I think his trip to Asia will be literally followed, or as he goes along, followed by major announcements that are positive for the U.S. and for U.S. companies, and including on trade. Lastly, just I think back on China, the message is going to be, I think, status quo as opposed to any major de-escalation, but the flip side of that would be escalation. So I think overall, the markets have been right to be rallying on this.
When you say status quo, we're looking at a tariff truce at the moment, which expires November 10th, and I believe the rate after that goes up to 150 as it stands at the moment. So does status quo mean an effective 40% rate that we're seeing on China right now, or does it mean we're just in this kind of freeze for the next year, as Scott Bessent would suggest?
So I think the tariffs that are in place today stay into next year. What we will continue to see are these rolling deadlines of higher tariffs that get essentially delayed. So by status quo, we mean what's in place today. I think looking out to next year, if China does buy more soybeans, actually does other things the U.S. wants on trade on their side, I think we could see the 20% fentanyl penalty potentially come down partly next year. But by status quo, I think it's where we are today.
Charles, there was a lack of discussion around semiconductors and the technology trade between the U.S. and China. Do you think that will become the key focus of the next round of negotiations, talking about chips and export controls when it comes to China essentially threatening these anti-monopoly lawsuits against NVIDIA and other tech giants in the U.S.?
I do. I think actually chips are on the table for this visit as well. I'm not sure we'll get to any kind of additional agreement. We have relaxed some chip export controls. I think that was in part because U.S. companies had been lobbying the White House on that, and the government, U.S. government's going to take part of those revenues. So it's actually a revenue generator for the U.S. As well. But I think in terms of any further relaxation of tech export restrictions, that's probably a phase 2 next year, and I think will be part of a deal to help for China to reduce some of the fentanyl tariffs. But I'm not sure we get to a breakthrough on chips today.
Well, while we're all talking about tariffs, it's very important that this Supreme Court ruling on tariffs, it begins next week. They're beginning hearing arguments on November 4th. From the traders and the people I speak to, even the questions the Supreme Court will be asking these original of those presenting arguments next week will be hotly watched for just any hint of where they're attempting to take this court case. Do you see this court case as really disrupting President Trump's ability to use tariffs for his policy aims?
No, I do think the court is likely to rule against him on IEEPA. I do think that that's likely, although it is a court that has consistently or almost consistently ruled in favor of executive authority. I think in this case they may rule against him. And if they do, what the administration will do, to answer your question, is very quickly pivot and find the other authorities the president has to reinstate most of these tariffs. I think also on the refund issue, because we're going to need to refund countries and companies, I think that the U.S. administration will make the barrier, the hoops very, very difficult to jump through to get a refund. So I'm not sure we're going to end up refunding all these tariffs either. But the president will reimpose or reinstate these tariffs relatively quickly. I don't think it'll be a change in trade policy at all.
Will the Supreme Court make that decision relatively quickly before year end?
I think that they will rule on this by December, because it is a major issue that with a ticking clock, meaning if companies and countries have to be refunded, that number just gets bigger and bigger. So I think we're going to have a final ruling on this by December.
Wow. By December. Does that include some of the pushbacks and the legal pushback around things like H-1B reforms, immigration, et cetera?
No, I think those are totally separate cases. I do think President Trump will probably climb down from his H-1 $100,000 fee for the visas. There's already significant waivers in place, for all sorts of exceptions. And the intent of that visa, fee, et cetera, was really to target China. So I think, in the end, it's hurt Indian engineers more. I think he's going to climb down from that.
Charles, I want to play some sound for you, if I can, when it comes to South Korea. Bloomberg had an interview with the South Korean president where he talked about what some of the hiccups around trade policy looks like. We know, speaking of immigration, South Korea has maybe unwittingly been kind of pulled into that conversation. Just take a listen to what the South Korean president had to say about progress on their conversations with the United States.
투자의 방식,
the method of investment, the amount of investment, the timeline, and how we will share the losses and divide the dividends, all of these remain sticking points. The US will, of course, try to maximize its interests, but it must not be to the extent that causes catastrophic consequences for South Korea.
I think it was really fascinating to hear the South Korean president there really highlighting that actually the investment purchases might be something that could come under some scrutiny, because this is also the conversation in Japan with the new prime minister there, whether the $550 billion investment promise is something that can be held up against. 6 months ago, this is something Donald Trump was promising domestically. Is this still a key pillar of how he frames some of these negotiations?
I do. I think it is. The real issue is that almost all of these trade agreements are still just frameworks that are not yet finalized. President Trump has a habit of announcing positive news that isn't yet finalized, and including on trade. And so what's happening in a number of these countries is the initial headline figure of investment that was promised, I think, is playing not very well domestically in some of these countries like South Korea. So we're starting to see some of the governments actually kind of pull back a little bit on that. When we get to the final agreement, I think the number will still be big, but it's all this promised investment in the U.S. There is a little bit of smoke and mirrors. It's a little bit of telling Trump what he wants to hear. Some of it's very real, but we will, in the end, 3.5 years from now, not be anywhere near the promised headline numbers.
Charles, every morning, Val, I, and every anchor at this network comes in and we're just digesting the trade negotiation and commentary on every part of the world. I think we've done a decent job today of covering maybe every country Donald Trump has mentioned on his tour. What are we missing? What is the flashpoint in this world that no one's paying attention to?
Well, on trade, the big issue is Canada. We've been saying now for quite a while that the toughest negotiation would be, aside from China, Canada. And I think we just saw that really blow up with the ad that they ran and really upset the White House. So what the U.S. wants from Canada are much bigger concessions than Canada is willing to give. So I think that negotiation, we're now finally in a realistic place, which is not a good place. That's going to be tough. U.S.-Mexico will be fine. In the end, U.S.-India will be fine. So I think overall we're okay there. Other things that we're watching on the horizon that are getting some attention that could become bigger stories or bigger issues, regime change in Venezuela. This White House is absolutely committed to overthrowing Maduro. I understand all the reasons why he may stay. That I'm willing to bet that within 6 months, if not a year, that there will be a new government in Venezuela. The United States wants much safer and secure access to oil and natural gas in our hemisphere, and wants Cuba and China's influence and Russia's influence out. So it's all part of a broader strategy. And I think Taiwan is still going to be a major issue. I'm sure it's on the table in the background of Trump's visit to Asia. And I think part of his message to Japan, South Korea, and our other allies in Malaysia is ultimately, we're going to be with you if there's an attempt to take Taiwan by China, but you've got to be with us as well. So I think those are some of the things that we're watching. And then we head into the midterms in the U.S. It's a year away, but it's already starting to come into focus.
And you're seeing that. And, of course, I think the voting for the New York mayoral election opened over the weekend. So that's always a fun flashpoint as well. Charles Myers, world tour with him, chairman of Signum Global Advisors. We thank you so much. Coming up on the program, we're going to go from the geopolitics to maybe a little bit more of the math. The earnings from the world's largest tech companies sharply in focus this week amid the multi-billion-dollar push into AI. We're going to dive into those details next. Stick with us. This is Bloomberg. Welcome back to the opening trade. We're 51 minutes into today's session, and the green on the screen that we entered this market with has faded quickly. We are seeing underperformance this time in the French index. I would say on par with what you're seeing in the UK index as well. The FTSE 100 is virtually flat right now. The DAX is your outperformer, but based on the way this market is going, we'll see for how long. Over in the States, futures also rolling over just a touch, but still higher by 0.8% on S&P E-minis. Now, this is going to be crucial, especially this week ahead when we have earnings on both sides of the Atlantic. But I think the one everyone's watching for is from the 5 of the Magnificent 7, whether or not they're going to bring their AI investment plans into focus as the race to scale capabilities intensifies. Matt Bloxham is all over the story. He joins us from Bloomberg Intelligence. Is it going to intensify, or every quarter we have you on, every quarter we ask, is this it for the Magnificent 7?
Well, yeah, I mean, for sure, there's clearly going to be a huge amount of focus on whether the demand is really coming through in a big way, and whether that's helping revenues, and whether it's going to push capex high. And I think we're going to see a bit of a mixed picture there. And I think also there's going to be some focus on whether this evolving trend is really affecting some of the established players. So, for example, Google, which reports, or Alphabet, the Google parent, which reports on Wednesday, going to be a lot of focus on whether ChatGPT is eating into their search business. Their core search business generates most of the revenue. And also we heard recently the news that we've got these AI-powered browsers launched by the likes of OpenAI. I think it's too early for those to have an impact. I'm sure there are going to be some questions asked of Google about whether they're worried about those. Microsoft also reports on Wednesday. I think the expectations are that they are going to lift their capex maybe by about 10% because they've been struggling to keep up with cloud and AI demand. I think elsewhere, Apple, a lot of optimism that the 17 has landed really well across the world, including China. So I think there's kind of a bit of expectation there already that that's going to be a strong print for them, and they're going to talk positively about forward demand. Obviously, the Air has been a bit of a weakness there, but I think the kind of the baseline 17 and the Pro models have been doing well. But obviously, maybe a little bit of softness on the profit side because they've been really hit by the trade impacts.
Matt, is it going to be this quarter where investors really want to see details of AI monetization, or is that still down the line?
I think it's still down the line, to be honest. I mean, I think they're looking for positive commentary around the kind of forward pipeline. But I think, if you're seeing these companies continue to invest, I mean, I think if you look at straight cloud revenues, it's going to be between 30 and 40% year-on-year growth. I think as long as they meet those expectations, and perhaps there's some commentary that a lot of that's coming from AI-related contracts, I think we're okay. I think, nobody's expecting there to be sudden kind of massive shift in momentum on the revenue side. It's whether they can sustain these kind of 30% plus growth rates into the midterm that's really critical.
Yeah, I think that's the key point, though, is when is the market really going to start asking the questions of where's the money, where's the revenue off the back of all this investment? Maybe not this time around, but it feels like it's sooner than it was a few quarters ago. Matt Bloxham from Bloomberg Intelligence, thank you for that wrap on the Mag 7s. Well, not only do we get 5 of the Mag 7s, but there is a lot of risk events on the horizon this week. As we mentioned, Trump is in Japan this week, meeting with the new prime minister. We do have a lot of central banks this week, Kriti. On Wednesday, we do have the Fed decision. Thursday, we get the Bank of Japan and the ECB. We also have the Bank of Canada. So 4 of the G7 central banks making decisions this week. I think the key is going to be the Fed, what they think of last week's CPI report that the market did take as soft, especially that drop in housing inflation. But it didn't seem like the bid into Treasuries really lasted that long.
Yeah, I mean, it's fascinating here. I mean, we could start. I'm trying to think about how we're going to end this week on Friday. Are we going to start kind of round tripping to where we're starting this week, or are we going to get something that really sustainably moves the dial? To your point, with central banks, the earnings that we just, of course, digested with Matt as well. Not to mention the geopolitics that are on everyone's radar. I'll throw one more in there for you, which is that we are also getting headlines from UK Chancellor Rachel Reeves. She's doing a tour right now in the Gulf, and she's speaking at a Fortune event in Riyadh, actually giving us a clue maybe to some of her peers about how to get a trade deal 101. She says taking Trump seriously was the key. She's also making some comments when it comes to the UK budget as well, saying that they're spending too much servicing government debt, and as well saying they're looking about tax and spending to keep to those fiscal reforms and fiscal rules.
Yeah, that comment on tax is interesting because we did hear from The Guardian. They were reporting that they were looking at increasing the base rate by 1%. So there is still, I guess, a lot to be considered ahead of the budget, which is coming in less than a month's time, should I add.
Yeah, I mean, it's fascinating here. We are quite literally in the countdown. Let's see how this all shows up. We've got plenty going on. She's making those comments, of course, in Riyadh. We should talk about the fact that we are there as well. The 9th edition of the Future Investment Initiative taking place in Riyadh this week. We're going to hear from the heavyweights, David Solomon of Goldman Sachs, Mary Erdos of JP Morgan, and many, many more. That does it for the opening trade. We have plenty more coverage up ahead on Bloomberg Television. Stick with us. This is Bloomberg.